Hi, this is Mac with PriceActionTradingSystem.com, and this is Wednesday. I believe today is March the 7th. Yes, um, and I was going to try to demonstrate a trade, but you see I missed it. I had my order right here, and price has actually bounced off my order a couple of times, but I needed one more tick to get filled, and I never got filled, and then they rocketed right back up here to the top again. So I missed this trade, but so I'm a little disappointed. But we may get a chance to go short off the top of this kind of this wedge shape. It's getting tighter, so if we do come back down, there's not a lot of room, and then as we move up, it's going to get tighter. And it's getting pretty late in the day, but if I get a chance, I'll demonstrate another trade. But I want to show you why I like this long right here. There's a couple of reasons. This is basically, this right here is basically the price action for today, starting with this bar right here. And let me show you this. You get this first leg up. There's your first leg, and then you got your correction. So then we're looking for a second leg up. It's just like that. And you can see that second leg, and that's exactly where price has got to. Now we've broken a little bit higher, and it's failed, and it's tried to turn back down. But that's what I was looking at. But we also had this trend line coming up through here, and we also had this huge congestion area. And even though we had an uptrend that was really strong right out of the gate this morning, since 10 o'clock today, there's been nothing. There's absolutely nothing to trade. There's nothing to trade here because you could have traded this little failed break lower here. You see how this bar went lower, and then there's enough room to scalp out before you get to the top. So there's an entry there, and there was also the other entry was right here. I was thinking there was a short in here, and there you probably could have gone short here, but I wouldn't have recommended it, not when this is held so many times. But this was the only other real entry this afternoon, was right here, and this was a pullback to this trend line. You can see I drew that off those first two swings, and that's exactly where we came to. But I thought prices would go a tick lower because here is the breakout area. We broke out above this, and generally you'll come back and test it again, and but we missed it by a tick, and you can see I had my order there, and I just didn't get filled, and I hate it because that was a quick and easy move back up to the top, and you scalp out 10 contracts right there. That's about 2 points, so that's 20 points I could have picked up on that trade right there that I missed, and there's a good chance we may go lower, but now we've got more congestion up here, so we need some kind of a trap or something before I'm going to be willing to take a short off of this. But I wanted to show you that, and I wanted to show you what I was looking at. And I've gotten at least 3 emails this afternoon, people asking about trades in here. And unfortunately, none of the trades that people were asking about were this entry or this entry. They were all taking longs right in here, one off the EMA, and I think another one here, and maybe one. But once you get all these overlapping bars and you see you've got all these matching highs, you've got resistance right here. So you don't want to be getting long here without a trap first. So this was the only place you could have really gotten long, was right here. And that trade, even it took a little bit of work, but it finally got up there. It worked. No bar ever backed up until you would have scalped out, so there was no danger. It was a little spooky if you entered when this bar ended up closing on its low. But as you see, prices never broke lower, and here again, prices never broke lower. So you had enough room to scalp out before you got back to the top. So this trade was okay, and again, only because prices broke lower and failed and created that trap. And that's all this is here. Prices broke lower, failed, and created a short trap. And that was a nice run back up to the top. Now prices are probably going to fail out the top and try to come back down here and maybe test this trend line or test this low again. I'm going to go ahead and take this order off the table because I don't necessarily want it there now, and it's getting late in the day. But if another trade sets up while I'm doing this, the rest of this chart lesson, maybe I'll demonstrate it, but it's getting really late in the day. But again, hopefully you can see that. Let me give you a good look here. Here's as you can see, there's the first leg. Then you got this pullback right in there, and then there's your next leg. And if you measured it to there, we got a perfect measured move, but that's the low point. And you can see that's pretty much where we got to before we had a bigger correction. And but it's just worthless to try to enter in this stuff, because all you're going to do is get, the only way that you can trade this is just to buy blindly at the high or buy blindly at the low, and then you're taking a big risk because it may not get back to the high. But if you enter below any bar, you're entering short at the lows, and if you enter above any bar, you're entering long at the highs. So stay out of this stuff. Don't trade. Wait for the traps. This was a great chance to enter at the lows right here. This was a chance to enter at the highs, but by the time you got a decent entry bar, you don't want to enter below that nice bullish bar there. But the first time you got a really bearish bar, prices were all the way back here again. And if you entered there and kept your stop above this high, it still would have worked, but it just is not a high probability trade. And so you're better off just to stay out of that stuff. And we may get a long setup here. I just don't know. Let's see how this trend line, how it reacts off this trend line here. But I hope that you can see those two legs. That's a nice two-legged move. So we were looking for prices to stall up here based off that first leg right there. And then we got this next leg. Now this leg was a lot more bullish, and it's possible that we'll get a measured leg off of this leg, but I'm just not so sure this late in the day with prices really finding strong resistance in here. So we'll see if this trend line holds again, but you've also got this trend line here. This is basically a wedge pattern, which is generally a reversal type pattern. If it ends up, unless we end up breaking above it and going much higher and nullifying this pattern, this is kind of a reversal type pattern. So we'll see what it does, but hopefully you can see that. And I'm going to go ahead and show you a few more of the trades. When prices opened up this morning, we were in this trading range. And let's just talk about it real quick. This was pretty much what we had at the open. We had this low across here, so we were right in here at the open, and the trend was working down. But by the time you got this second entry short right here, there just wasn't much left. I mean, you were down here too close to these other lows, and if you took this, you probably would have survived it as long as you kept your stop above your entry bar. You probably would have survived it, and I believe it would have got a scalp. But I didn't take that trade because there's just too many overlapping bars. This is not really a trend. Even though we got one nice leg down there, that's not really a trend. We're still in this trading range. And so this is just another little congestion down here at the lows. And you can see prices finally were able to work a little bit lower, but all they did was reverse. And you had a decent long right here, but again, this was kind of suspect. But you really had these lows across here from the overnight, and you had a kind of a double, triple bottom right in here. And that when prices bounced off at once, and then the second time you could have gone long, and you see this one tick. That one tick right there is important because a lot of people probably got short right there, and a lot of longs that might have got long here probably exited here if they were still in the trade. So it traps one group out and traps the other group in, and when prices reverse, then they have to all exit or add back on. And so one tick, so going long right there was a good trade, and you see it turned out to be a nice trade. And there was another chance to enter right here as well when prices broke up here. And again, it didn't go very far, but it was good for a scalp. But when we pulled back and made this higher low right here, this was the place to get long. And it took this a little bit of time, but as you notice, again, notice the lows of these bars, how no bar was ever able to tick lower. So even if you were tightening your stop each time, you were still safe. And this was this is basically a broad double bottom. This is a higher low, so this is a double bottom pullback. And that's what this trade was right here. And that's why this would have been a good trade as well. And also you got this congestion, and that's a failed break lower. So you could have gone long right there. That wasn't as good an entry. But when we tested this again and made a low and then made a higher low, waiting on a nice entry right here, was okay. And you can see this thing rocketed off right up to the top, right about where this, of course, I didn't have this line here then that was kind of hard to see at that point, but by the time this one turned back there, then it was fairly obvious. You try to look for your lines across here, and then that's held all day long the rest of the way up. And this one so far is still holding on the way up as well. So we kind of got this wedge pattern, and I don't know how this is going to end up. My guess is we may bounce off here again, but now we've got a failed break out the top of all these highs again, so we may pull all the way back down here and still try to test this breakout area right across here. That was a double top, and we tested it a little bit right here, but that's just kind of congestion. And usually prices are going to test this area a few times before they really take off, unless the market is super strong. So we may not test this today. We may or may not. I'm guessing that we may. And that would be the first break of this trend line right here, and then we may get another bounce. So I doubt I'm going to hang around that long to watch it because it's 1:30 now. It's really getting late in the day. But that pretty much was it until we had this trade right here and then this trade right here. And again, it's dangerous shorting this up here because the trend has been up. But really, by the time you got an entry, you could have actually taken this short right here because it's a failed break above those highs. So this short would have been okay. But I just don't recommend taking shorts, especially when the prices are coming off the EMA like they did right here. And again, right here, you're better off looking for longs right there, and especially when this broke lower and failed right here. So hopefully that makes sense to you. But again, hopefully you understand why you don't enter in all this stuff. Whenever you start to see all these overlapping bars and all these dojis, if you enter there without entering at the very highs on a failed break, or the very lows on a failed break, or some little bitty tiny doji that maybe doesn't even fail lower, say like if you had this little doji, or maybe even one smaller than that, it's really just a tick or two, and you can get low right here at the long, right here at the lows on a break higher, then that's okay. Otherwise, you just have to buy it blindly, and I hate to tell people to do that because too many people don't get buying blindly, and you have to really understand the price action well to be doing that. So you're almost always better off, if you're not really good at reading the price action, to wait on a trend bar in your direction. So see, as prices were coming down here, here's the first trend bar you really had in this direction, and look where it was right off the trend line. And I probably should have just moved my order up here and got long right here, but I was really mad at myself for missing the entry right here, and I really was hoping it might break higher and come back, but it didn't happen. And now you see I missed a nice long here. So, but hopefully you understand that. Again, you want to have a trend bar in your direction, and look coming down through here. That's you got a doji right here. You got another doji right here. You got another doji right here, another doji right here. So no reason to be going long. Even if you'd had your long order there, it never triggered. So as you can see, that prices never broke higher. So there's no reason to be looking for a long yet. But here's the first bar that opened on its low and closed on its high and kind of has a green body. So that's your first really trend bar in the right direction. That's not a doji. And you also had this little double bottom matching lows that broke lower, so that's a trap, and you had a little break below this trend line, so that's a trap. And so there's a couple of reasons you could have gone long right here. But your key entry points are always going to be along these trend lines at these strong support and resistance areas. And if you're trying to get long anywhere up in here, you're just asking for trouble. And again, like I said, I had 2 or 3 emails of people asking me about entries right up in here, and I believe they were all to the long side. And you just can't do it, because if you get long up here at these strong resistance areas, if it does go higher and you get out, you're just getting lucky, because the market is overdone to the upside here, and it needs a correction of some kind. You see how strong that move is there? Generally, when you get a move that strong, you're probably going to get a second leg, but I think the problem is this is just the second leg, because this was your first leg over here. So now you got a two-legged move, and you're going to need a little more correction before you are going to get anything else to the upside. Now it's looking like we've got a short right here, or a trap right here, a long trap, and people getting long on that first entry right there, and up here near these highs again. But I don't like a short because this trend line's going to act as support. All a trend line is an angled support and resistance line. It's just like this. It acts just as strong as support and resistance as a flat line, but it's just at an angle. And you can see what happened once we had it proven. It came back right there, and the odds are if it hits it again right here, it's probably going to hold again. And even if it breaks, we may get a retest. So that's why you got to be careful with these trend lines and pay attention to them, because they're basically support and resistance lines that are just angled. So I'm going to go ahead and wrap it up. It's too late in the day to take a trade. This is getting into 15, almost 16 minutes. So let me just do this real quick. I'm going to circle the trades one more time just for your, just so everybody sees them. That was really your first trade. You had a long there. This was an iffy long. I'm not going to mark it. This was a long, and this was your best long of the day. And you had a possible short there, another long right there, and a long right there. And so there's your key entry points today. Hopefully you understand why those are key entry points. Let me just, so people can study this after the thing finishes. But there's your support right along there. So now hopefully you know why those are key entry points to long. I need to change the color of this one. And really, I don't even really like this trade because the trend was up. So I really don't even like that trade, but it was okay if you saw it, so I'll just leave it there. But this was a long, and again, this was a long because of the failed break lower right here. And when you put the lines on there, it generally makes it a whole lot easier to see. Then you can see that right there. And you had all these closes and the most touches right along that line, and then we broke lower and failed. And if you wanted to, you could have drawn it like that, and you can still see the one little tick failed to break lower there. So going long above that doji was good, and that was a good trade. And then this was also a second entry long. There's your first entry. Prices came on back, and there's your second entry. So this is a second entry long after a two-legged pullback to the trend line, and it was also a failed break lower below these matching lows. And so there was a lot of reasons to take that trade right there. And I hate that I missed it. And I was just trying to get greedy really by entering down here. And even once, and that was still a good shot, but when it didn't get filled, I should have jumped up here and got back in. And I just didn't do it. I talked myself out of it. And so I'm kind of mad at myself because that was a nice 20-point trade I could have picked up right there. But anyway, I'm going to wrap this up. This is about 18 minutes. There's your trades for the day. Let me back out so if anybody wants to study these entries and see them. And hopefully you understand why those are the right entries, why those are the key entry points. And I got a couple of questions yesterday for some people asking me if I take all these trades or if I trade these trades. And the answer is yes and no. Usually what I do is I mark all the key entry points so people can study and learn where they're at and see how I found them. But if I was trading, I likely took these trades, but I might have also taken other trades in here that I didn't mark because they're not key entry points. They were still good trades, but I try to teach the key entry points for beginners and people that are struggling to get profitable and people that are struggling to learn how to read price action, because not all these trades are key entry points. And so for that reason, yes, I usually take most of the key entry points if I saw them. Sometimes I don't see them either. I miss them just like anybody else, or I taught myself out of taking them, just like right here. I didn't take that key entry point. I saw it. I knew it was there, but I tried to get long down here instead, and I missed this trade. And if this had been early in the morning, I'm sure I would have probably gone ahead and gone long there when that broke higher, or I would have dropped a limit order in there somewhere after it broke higher and pulled back. But that's neither here nor there. But that's the answer to that question. Yes, I generally take all the ones I see until I quit trading. And I was done by this time right here, 10:30 or so. I just called it quits because we went into this stuff, and I got tired of sitting here watching paint dry. And so, no, I did not take these trades. But they're still, like I said, this one's iffy, but this is a good trade and this is a good trade. Those are both key entry points and key entry trades, and they both would have made you some money. So anyway, I'm going to wrap it up. It's 20 minutes now. This is Mac with PriceActionTradingSystem.com, and we'll see you tomorrow.